Hello. As you can see here, Palantir is currently trending in the markets quite significantly, quite a lot from yesterday. And the reason is they had their earnings report, although you can see that the sentiment is actually worse than yesterday. And there is a reason for this. If you take a look at the metrics tab over here in R2, you will see that the stock is down 15%. So they had their earnings report and they missed on earnings. You will see here in the stock news that Palantir shares fall more than 10% following earnings report, tumbles on Q2 earnings miss, weak revenue outlook, and so on. We will examine that in more detail, of course, just to see what the company has done, and we will also examine it in the sense of what is the company worth right now, after the stock is going to fall quite a lot when the market opens in a few hours. Actually, less than an hour since I'm recording this video. And we are probably looking at a pre-market price of below 10 bucks is what we need to know already. Okay, let's take a look at what happened during the earnings report. What were the numbers that were given out from the company? So, Palantir shares fall more than 14% actually following earnings report. Now, what happened here? Here's what the company did. Loss of 1 cent versus earnings of 3 cents expected is what happened, which is a pretty steep miss, especially when we are not even talking about profitable EPS here. Still staying in negative territory, still losing money is not great to see for the current quarter, of course, as you can understand. And in terms of revenue, 473 million versus 471.3 expected, which is a little bit better. Now, Palantir's revenue for the quarter increased 26% year over year, and commercial revenue grew 46%. Now, the software company, which is known for its work with the government, and we have talked about it in the past, it's probably one of the things that I like about this company. Two things really: the fact that they are actually working on data, and the fact that they are working with the government, because it's something that the government will probably be needing in the next few years or so. They always need some sort of data analysis plus surveillance, I suppose. So said its commercial customer count increased 250% year over year, growing from 34 customers to 119, which is pretty significant here, as you can understand. Now, the CFO of the company told CNBC the company's miss was due to a decline in investments and marketable securities, and he also said that commercial growth is widespread over here. He says that the strength and momentum we're seeing with our customers in the United States is a reflection of the refinement and maturation of our software platforms. Another interesting thing. And Palantir, in terms of guidance, they expect to report revenue between 474 and 475 million, that's very precise actually, for third quarter, and between 1.9 billion and 1.902 for the full year, pretty much is what they are expecting to do. Now, this is kind of weak, or at least weak relative to what was expected, and one of the reasons is the lumpiness, as it's explained here, of government work. But the CFO is confident that the company's pipeline will continue to flourish in the upcoming years or so. Okay, so let's examine the company's financials a little bit and some other aspects of the company in order to decide whether it makes any sense to be buying the company's stock right now. I kind of wanted to get a little bit of a sense of what is going on with insiders here at Palantir. So you will see here that overall there have been some sales for the most part, and the other pretty much purchases or trades or buy or sales are pretty much awards over here, and some sales, as you will see, plus some conversions, as you will see here, C-type transactions. That would be conversions of derivatives, for example, as you'll see here. This way they have zero in terms of price, in terms of transaction value here, just because these are derivatives that were sold here, that were converted. As always, if you are interested in the details of the conversion, you can pretty much click on our tool here, and you will get to the form type, and you will see here on SEC that pretty much this explains what kind of conversions happened here. Is a transaction is a transaction as part of a series of transactions here, which pretty much is a conversion of Class B stocks that have previously vested, as you will see, RSU units. And this is a conversion of the Class B common stock to Class A and so forth. So you can kind of examine the finer details if you are really interested here. But what I kind of wanted to see with the insider sales or buys here or purchases is, first of all, I want to see whether there are any purchases. There are not. There will be some green here, which the value of the transaction type would be P as a purchase. So that's not happening. The other thing that I want to see is whether the chief financial officer, as you'll see here, the CFO or chief financial officer, you can kind of search for both just to make sure. And we want to see what they are selling, because it's the person that actually made the remarks, remember? Mr. Glazer here. So we kind of want to see what they have been doing in terms of selling and buying. And actually, they have been transacting 6 days ago, and they have been selling stuff. Now, how many securities? You will see this is like 1/20th of the amount that they actually own right now. So it's not a lot. They do own way more. They have sold some, and you will see all the lots over here. And they went down to 1.9 million actually. But if you go back, you will see they have been selling, actually the latest ones, yeah, they have been selling some lots, small lots really, 15,000, 25,000, pretty much every quarter or so. So this is typical, this is very, very normal, and I wouldn't worry too much about it. They want to be making some money, and they have sold 107,000 here, 106,000 here, and again 105,000. So it's almost they are doing that every year pretty much. So very, very normal in terms of how they are acting here, and no buys. It's worth noting, especially from the chief financial officer, just to see whether there is any switch, any change in the way they are interacting with the company stock. Nothing to see here for the most part right now. Okay, let's go back to the metrics page. Now we will see what is happening with the company's financials. The P ratio of the company is negative. The company is not making money, and that is a big problem with Palantir, as you can understand. The price to free cash flow is high but positive, because the company is converting, is making some free cash flow, more than likely because of adjustments to the cash flow statement, I'm assuming. We'll examine that. And outstanding shares that keep going higher and higher. The company is massively diluting shareholders, something that you hate to see, because at some point the company had like 1 billion in terms of shares, and then they started diluting investors tremendously. Now they don't seem to be having tons of debt here, which is a nice thing to see, and they have been growing nicely again through the years. Not tremendously, but still fairly nicely is the growth that they have been achieving. And it's only the net income that doesn't seem to be budging still. It's still at similar territories. And so the returns on equity here will be negative, and the net income margin will also be negative. Again, the company is not profitable where it is right now. You can kind of take a little bit of a closer look at the income statement, balance sheet, and cash flow statement. You will see that the company, has been pretty much tripling their revenue, which is good to see, but the net income is staying at about the same levels, 580, 520. So not much, not much effort, not much progress being made there. In terms of the balance sheet, remember the company has been issuing tons of shares, and so their total equity has been going up, but you can see that in additional paid-in capital, they have been massively diluting shareholders, and you can kind of see that being added here in their balance sheet because of extra funding coming from investors. This is not great to see if you're an investor yourself, because you are getting massively diluted, as you can understand. Now, the net income was negative, and as I told you earlier, it came back to negative territory because of stock-based compensation. These kinds of companies tend to pay their employees with a lot of stock, and that is very, very problematic, because in order to find that stock, they have to dilute you for the most part. Otherwise, they will have to keep their net income to make their net income even worse, so keep it down even more. So they do at least have this adjustment in terms of net cash from operating activities here, but they are paying tons in terms of stock, and again they are massively diluting shareholders. And in terms of investing activities, negative stuff here, which means that the company has been purchasing some investments. And in terms of financing, they have been getting some debt. Other than issuing shares, they are still getting debt as well, financing activities, and also issuance of common stock over here. They do have 2.3 in terms of cash, 2.3 billion. And again, the free cash flow was at least positive last year. Now, if we take a look at our stock evaluation tool, as you can understand, it's a story of negatives. The company hasn't been positive in terms of how they are growing. And so what can we do here? We can at least, presuppose that the company is going to be growing at least the 5-year average rate. Let's just say that they will be doing 14. Then I'm going to go 25 and 35. I'm going to go bananas here. I'm going to assume that the company is going to be growing tremendously through the years, as you can understand. And the net income margin has been very, very negative. And so I will assume almost marginal profitability here. I'm going to go 3, 5, and 7, and let's see what we'll get out of this. We're nowhere near that, as you can understand right now, but this can easily happen when the company achieves profitability. provided that they do, of course, because again, remember, the net income was at about the same level for 5 years later or so, 4 years later. In terms of free cash flow margin, again, the company has been in negative territories for the most part, so we're gonna go 80, 90, and 100, which is something rather typical, and 13% for our annual return. And if we hit calculate here, have I clicked it? Yes. So you will see that we are very, very far based on the current price, which is again at about $10. This is not the current price. After our pre-market, we're actually sitting at about 10 right now. And so, yeah, we would want this company to be at $1 or $2, frankly, in order to be a potential buy. And even then, that would be a stretch, frankly speaking. This is why it's really, really not a good idea to be potentially entering this one for a long-term hold. It's a very, very risky opportunity here, a very overpriced opportunity as well, based on what it is. And so I would have to stay away from this one for now. But thank you for watching this video. Please remember to leave a like, that helps a ton. And also subscribe if you're not a subscriber already. Also remember, you can gain access to this tool by becoming a patron. You can find the links in the description box below this video. And in the meantime, take a look at the video that I made earlier. This one discusses Meta and what is going on with the company, whether it will be achieving $300 or so at some point in the future, anytime soon. So again, thanks for watching, and I'll see you soon. Bye bye.